This is Justin Amazon on Monday, March 26, 2018. We left off on Friday with a massive sell-off and then just aftermarket, nothing going on. But Monday, pre-market, we come right back up to the point of that sell-off. And so anybody who shorted in the last couple hours of the day on Friday were trapped, and you would expect then that it would just rally. Trapping those folks, they had to buy to close their positions, and we open up the last 5 minutes before the open. We get a large engulfing candle, and then we actually break out above the pre-market highs and break out above the level we were at where we rolled over on Friday. And so we're definitely trapping everybody. Move up a little bit more, and throw in this nice upper shadow or upper wick here. And that was kind of a first signal that, we may not be ready to go straight up any further. The next candle we got was completing an evening star reversal. And so you could, with these two wicks being, similar length, similar price of the highs, doesn't even get up to the price that we have in here, about 1540 of a old level. And so we step into another candle, and this one comes right back into our 1528 line. So at this point, that was too quick of a reversal. It's Monday morning. Everything's really spready. It was really difficult to get into anything at that level. It didn't get up to our prices that we've been watching for a while. The only thing it did get into is the range of this candle, the small candle inside candle from yesterday. But we'll keep stepping in a couple more candles. We did have a squeeze start to form, and we were losing the bullish momentum. So that was another signal that it was potentially going a little bit lower. The body is inside, but we threw an upper wick, and then we have an actual inside candle, lower volume. The squeeze continues, and then another. I guess this is a bullish engulfing, but just a high wave candle. A lot of indecision, and it's we're just not sure which way we're going to go. We're right above our 1528 level. And, it'd be interesting if, it came down here and bounced, and, this is enough of a pullback into the pre-market levels. And, if we come back up into the 1540, then, maybe roll over. But in this case, we actually push straight on through the 1528. So anybody who is buying here looking for, an entry to have a move similar to this, even if you have a stop down here below the low of the day, you just took out the low of the day. So, evening star reversal, 15 minutes of sideways, and then a breakdown, trapping anybody who went bullish. This is a clear signal that we're bearish, and we took out the low of the day and some pre-market levels here as well. So at this point, there's multiple signals that we're going bearish, and maybe we're going to come back up into 1528 and then roll over. And instead what we do, is we come up, push through it a little bit into the high here. And I was watching in this area to get into some puts, and they were just still too spready. I was looking all the way down at the 1500 put up at this level, and let's see, then a couple more, and then even this candle I was looking at getting in to the 1500 put expiring this Friday or Thursday, because Friday's a holiday, or the market's closed Friday. And I still didn't like where the range was on the 1500 put. And this is a Monday, so I'm okay going a few more strikes away, a lot of strikes away, going 25 points, 30 points away. But it was way up here, and I'm like, I don't like that option. I couldn't get it above the low or below. I couldn't get above the high from these candles or below the low on that option. We'll take a look at that option in just a little bit. But this is the candle. So we'll come back to this 935. the low of this candle. It was around 12 or something, but I wanted 100. I wanted my risk to be 100, and it would have had to be closer to 200 to get below these lows. What I should have done is just, trust that, the analysis was right, that breaking below these, even having a stop here instead of here was going to be good on the option, because this candle with this upper wick here was the last chance to do anything bullish, but it didn't even get above this signal candle. So this was 1531.55, and this one is 1531.41. So 14 cents below, didn't even get above that high, didn't get above these bullish candles. Somewhat of a consolidation here over, after this candle, another 25 minutes in consolidation. We've got our bearish squeeze. We have a squeeze that is looking bearish with increased momentum, and then we roll over and we go down and throw a wick down here, which there's nothing in this area except for a little bit of consolidation here that maybe some folks are buying off of, the lows in here, but we broke through that. So I was surprised to see it come back up at this level, and then we just break below. And we come right into our 15.14 price. This would have been a great place to take off some profits, or definitely move your stop to lock in some gains. And then the very next 5 minute, we just push straight on through that. The squeeze had fired, everything's bearish. We come, screaming lower, and we're looking for the next level at 1500, and we tag it. So the low here was exactly 1500. We actually, on the very next candle, get a tiny bit lower, but after that kind of a candle, right off of support with a bullish engulfing, similar volume, we started to lose our momentum on the bearish move. This was, the level that was the last little bit of people trapped. We're basically retesting very close to the low of Friday. And I'll just tell you, from here on out, the rest of the day was incredibly bullish. And I didn't expect that to happen after, this kind of strong move, bearish, these large 5 minute candles, in 25 minutes. I mean, had I gotten in bearish on that candle, which, I was kicking myself that I didn't, but I didn't get the setup that I wanted. After, that's 1, 2, 3, 4, 5, 6, 7, 8, 9 5 minute candles. That would have been 45 minutes to a massive gain. The option around this price was $12, and down here was at $24. It would have been a double on the option, with the 1R being 100. Would have been a 12R gain, which would have been crazy to have that much. And who knows if I would have been getting out there. Likely, I probably would have gotten out at 15.14, just with a single option, or, having, I probably would have been trying to set up or trying to move let's see, would I have canceled? I probably would have had something like 2 or 3R gain and gotten filled and would have missed a lot of this, or had kind of an outrageous like 4 or 5 or 6R, because this was moving so large. And as it was coming in this, looking at it and saying, this is really moving significantly quick, let me lock in something, locked in maybe 6, and, or just trailed up to my stop to say, okay, I'm not going to give any of this back, and lock in, or move my stop so I'm at like a 3R gain, something like that. But you would have had to be really nimble. Way down here, this would have been a place to get out and then reverse, which would have been, phenomenal to do. But this is the only thing that I was looking at to pick up when it was bouncing here. So it bounced just as quickly, it had a move lower with this candle, and it, with a bullish candle or a positive candle in between. In this case, it bounced really strong with a bearish candle in between and then continued. And as I said, the rest of the day was just really, really bullish. On this candle, this was a phenomenal candle to see, okay, are we going to roll over, or are we going to continue? And it continued. The low here was right above our 15.14 price. And you get some consolidation in here, and you're looking for a break higher. and I think it just continued to move. Oh no, it did roll over. That's right. I forgot about that. So what's interesting here is that anybody who had gone short off of maybe this candle, looking for a retest here, that was the opportunity to get in, but there wasn't any level in here. Maybe just playing, a retest of this kind of odd looking, distribution distribution where it then rolled down, came back up and retested the lows here and here, rolled over, and it just didn't continue. It just bounced just like these two candles. You have a bullish engulfing candle here. And from there, it trapped anybody else going bearish. And nice consolidation here. This would have been a great signal if you had gotten in bearish and were just holding, tighten up your stop to here, get ready to be stopped out, or have it in your plan that after there's a consolidation like this, you're just going to get out, once it breaks, or not even wait for it to break, because it could move against you quickly. And that's what happens as it starts to move. Anybody who had shorted here would have been stopped out. And then anybody who got in long on this pattern was, rolling in dough as these candles, it moved up, retested, another consolidation of some small candles in here, and then bounce. This candle was incredible too, because a squeeze formed on this candle. It's pretty obvious, okay, to our 1528 price, it's probably about a 1-to-1 risk reward on this one. And there's one candle. And so you could have gotten in on that candle and just ridden this up and taken 1R on the option, or on the stock, or a little more than that on the option. It went up, took out the level we were looking at that we went bearish earlier, went up and wicked there. So another place that it could roll over, and some more people were getting in bearish. That's with the upper wicks here. And it made this retest in the 1528. It looks like we were losing some of that momentum from the bullish squeeze, and then it just consolidates and looks like a double top in here. So needed a little more rest at this level after it had the rest at this level and then rolled over. It needed a little more rest on its way up. In this case, more people were going bearish, much lower volume this time than the volumes we had earlier. Just how late it was in the day. It was lunchtime around here. We threw in a lower wick. What's incredible, so if I go back over here and point out, when we had a smaller candle, we came right into that range and rolled over. Now again, where do we go? We have a small candle. We come right back into that range here, and we bounce right off that range. And that's how the day just continued and just screamed higher. Now about here, it's looking, okay, this is the last chance if it's going to roll over. Now we're at the highs, and it just pushes right on through. I think this one was close to Marbozu. Let's see, the open and the low were the same, but the high and the close were 6 cents off. So this is really close to a bullish Marbozu, but wasn't quite. But it just continued higher all day, and that's how we closed. From the 1500 price, it just rallied. If you had taken any trade bullish in here, with a conservative stop, it would have worked. Anywhere you had a consolidation, and taken it bullish, it would have worked. Now, if you had taken a retest, gotten in on a retest with a stop, maybe here, or, gotten in at 1528 with a stop a little bit below, you would have been stopped out here. This being a double top, that just didn't play out. Would have been pretty obvious as it's come back up. It's like, okay, this is just going to continue. There wasn't much conviction on the bearish side. There wasn't even a turn to go with bearish momentum. The momentum stayed positive all through this. And this was not the area to go bearish, just because we're in the same range that we were in the pre-market. And so if you look at where the cursor is, it starts to look like a larger double bottom with a small retest in here breakout and then a larger retest here. And it just held these lows. So the low here was 1526.47. The lows on these candles was 1522, 1522, and then the low here was 1522 again. Did I say which one was it? Let's see, the high in here. So the high was 1521.90. So, you know, this whole area is the 1522 price just, it broke, it held as resistance, came back down, let it, and then it bounced off of it and then bounced really well here. And so let's see if I can draw that in just to show it. I know I just talked about it, but oops. See, I'm out of practice with drawing lines live. Let's try that again. Something like that. There we go. I'm just going to delete this one after I'm done, but just to make the point. Okay. There's that price level. Pre-market low. It held as support, broke down here, held as resistance. Kind of let it break out. You know, it consolidated right on it. Could go either way. Continued, retested, and just rallied. And so, you know, we've got a lot of these lines that are drawn in from other days that we were watching it, you know, interact with, and then it had, you know, this line it interacted with from pre-market, and then multiple times during the day, and that was a great place to see, okay, if we hold that, we're going to be bullish, and gotten in on any of these candles bullish, it would have just been rallying. Would have been rallying. Would have been incredible. So if we take a step back and take a look at options, let's see. So this is the call and this is the put. So this is where I was looking. Let's see, what candle was it here? It was at 935. So the 935 candle, that low, or that I could have gotten it at 12. As I said, I wanted the low on the option to be above the wicks up here, and that would have been taking a stop down around 10. So instead of getting in at 12 with a stop at 10, I could have gotten in at 12 with a stop at 11, and it would have worked, you know, 1, 2, 3, 4, 5, 6. I mean, 6 candles later, I would have been almost had doubled the option. If I waited, you know, 8 candles later, it would have doubled the option. Probably would have been getting out somewhere in here, especially at the high of the day on the option at around 17. That would have been a good target. It almost made it on that candle there. What is that one? This one with that wick would have almost made it there, and probably would have, at that candle, probably would have moved my stop up to lock in, you know, 1 or 2R. And had I locked in 2R, I probably would have been stopped out. When it came back up and did that, I probably would have been stopped or trailed out for, you know, 14 or something. I locked in 2R in a matter of minutes, but I would have missed the big move down. So, you know, I was watching this candle and it's like, I can't get my risk, you know? So at that point, you know, I could have gone out, even though they're $10. Oops. 1490, and we'll take a look at 1490, what that was doing. So at our 935, you know, that was 1050, and the low here was, you know, still another almost $2, 865. So, you know, maybe go out to the 1475, which is, you know, at this point, that's 65 points away, or 55 points away, excuse me. And let's see, on this candle here, 935, there is no 935. Okay, that candle here, you know, maybe bought at 8 with a stop at, see, that's still 650. It was just really, well, yeah, it was really spready. There was not a lot of options volume this far away. But you can see, you know, there was still a significant move. Had I gotten in 8 by 7, could have gotten out at 15. That would have been almost doubling the option. Would have been a good, probably 7R on that option. But the one to play was the one I mentioned, the 1500. Or if you have a larger R, you can come closer to the money with your strike. And what was phenomenal is how much money was lost on this option after the tag at 1500. It moved against it the rest of the day, and the option closed out at 360. Now, if we look at the call, the 1500 call, actually, I wouldn't have been getting that. I would have been looking for the 1525 probably. And so the 1525 call would have been on this candle put in its low, and in this candle it was already a little bit higher. So that candle was 1467. So it was already starting to bounce in this candle. But by the time you realize that that's moving so quickly, it probably would have been up at 15, 16, and then the low down here at 14. 27, maybe you got in at 15, but probably not. Probably you got in at 16 or 17 on this candle. If you were ready to go bullish at this level, which it's our line, would have been. And then the next nice place would have been either on either of these candles, or after it ran up, rolled over a little bit, or pulled back a little bit and got in on these candles. And the low here was 1752, 1780. So you could have gotten in at with a price at 18 with a stop down at 17, and that would have moved. It would have chopped for a little bit. It would have given you a couple R right away, and then it just kind of went up gradually, pulled back a little bit. If you had been trailing up your stop with the lows, maybe you got stopped out when it put in this lower wick here. If you had trailed up your stop around 22, then this pulled back to 2130. So you may have been stopped out or trailed out after it broke below this, because you didn't know if that was going to form a double top and roll over, or what was going to happen. Our 1428 price has been really strong too. Or you were playing really conservative and just once you got some gains from the $18 price, you just put a stop at after it moved up here, put a stop at 20, and then we're just going to move it. But anyway, had you gotten in at 18, at 17, at 16, anywhere down in here, you would have been, pretty much calling the bottom on this move. And if you had just held on, that would have been a 20R plus, day just with that kind of move. So that's phenomenal to have that kind of move on Amazon. That's what I enjoy so much about trading Amazon. The other thing I was just looking at here is what some of these levels were before on the hourly. And so we, on the hourly, now you can see the levels that we were using as our neckline of this move here. Sorry, let me step back a second and say this looks like the neckline of a head and shoulders, where you got a neckline at the 1514 price, and very similarly you have a inverted head and shoulders here with a neckline that's probably the 1514 price, or this range. But what happened with this inverted head and shoulders is that after it broke out, it retested aftermarket, not on the very next day. The very next day after the big rally was a consolidation day, and then a retest of the 1514 price after market, and then just bounced and rallied into this over the next few days. And I see the potential. I see this forming here, that it's possible for it to do it again. That's an incredibly strong buying candle on the hourly. And even if you had bought with a high above it and a stop below it, or with a trigger above it and a stop below it, you would have been at 1R already on just the day. So if you were just trading the stocks, that would have been something that would work. So what I'd like to see here is that obviously we didn't get the aftermarket sell-off yet. So I'm thinking tomorrow could be a consolidation in this same kind of format, just like this one was somewhat of a consolidation. I don't have any lines in here to say, oh, we should pause here, but we've got the ranges 1565, back down to 1545, something like that, or maybe some of the levels in here. But there, we've only been up at this price a couple times. One of it was a gap down, another was a pretty strong move through, and this is the only one that's consolidated here. So if we open in this range tomorrow, I would expect it to, or anticipate, I don't expect it, I guess. I would anticipate a trade similar to, similar to this day, where you just have some consolidation that people who missed out on the previous day's move are looking to get in, wanting it to continue, and they're just going to get chopped out because of the premium loss. Now it's extra premium loss in the options because it's really like a Wednesday instead of Tuesday tomorrow, with options expiration on Thursday, with Friday being day where the market's closed. There's some more premium that will be lost. So if you're going to get into something, you're going to look for it at one of our lines here and look for a quick move and then to get out, rather than something you're going to hold on to. Had I been in, the option here, and we'll go back. Let's see. Had I gotten in here and just, let it go and just didn't even look at it the rest of the day, and just set a stop, which wouldn't have been a good idea to do because, this moves so much, wouldn't want to lock in profits. But had you just thought, okay, I'm just going to hang on to this for a couple of days, to options expiration, we've been bearish, or the last couple of days have been bearish, we're just going to roll over, you would have been stopped out up here. And not even up here, probably stopped out in this range because of how much premium was being sucked out of this thing. So that's the call again. The put, had I bought at 12, would have been stopped out around 12.10 when I put in a new low. So 12.10, or a new low on the option, 12.10 was after the squeeze, was on this candle. So the option price on the put that I could have bought at 12 right here would have been stopped me out on this candle down here. So that just shows you that from this price, 15.26, to this price at 15.24, okay, so that's only a couple dollars, but you had lost that much premium, and there was so much bullishness coming into this that the market makers are looking to take some more money out of things, bringing the option value down. But it's also like trading a Tuesday rather than a Monday. So you come back over to this hourly chart and see that if this plays out similarly, consolidation day, and then another somewhat a consolidation day if it does retest. But we'll watch for that retest tomorrow night and see for the next video if this is something that's going to play down to the 1540 price and then bounce again, or what's going to happen. So this was Justin Amazon. Hope you enjoyed the video.